Hi, everybody. This is Gardino Sentiment Timing, and this is our technical video report for Monday, December 20th, 2021. So the Bulls tickled on the chin today, but it actually we closed well off the lows on it, and it's just one of the risk factors as far as getting overly bearish in this time period. Does not mean we can't continue to sell off into the new year. As I said, news wise, there's more reasons for it to happen than not to happen, but really all we can go by is what we're seeing from a technical basis. So this the first chart I'm showing you. This is the S&P futures. So I showed you the reverse symmetrical triangle pattern, and this was when I sent it out when we had that little bounce where I said we hit the bottom of it and we had a bounce. Well, what we did is we actually came down and made another touch of it, and through that you can see we have some bullish divergences in place from it, and we saw the futures rally from 45.17 all the way up to 45.72. So it's a close to a 60-point rally on that. So this was one of the reasons why I was given both sides of what is going on, because some of this stuff comes from your gut and stuff, and I don't. I mean, the Build Back Better plan getting shot down, I think, is actually more productive for the country and businesses than if it would have passed. So, I mean, this may be just another one of those head fakes, like we went into the Fed meeting where the date we were kind of sinking as we went into the announcement, and then from there they announced exactly what everybody was anticipating or fearful of, was they're moving up as far as tapering, and they're going to start raising rates in March. And from there we saw the S&P rally 90 points. So I have a feeling there's just games being played right now by the master planners, and they have these algorithms kind of programmed, and they're just trying to catch everybody on the wrong side. And this is exactly what this pattern does. I've somebody I used to call it the nut hut pattern, because you get, when you're up when you're down here, everybody's bearish, and before you know it, we're back up to new highs. Everybody's bullish, and then we're back down again. So it's an emotional roller coaster. But it's very hard to trade, because you don't know if this pattern's in play until we actually reverse back down. So let's actually go to the S&P right here, and this is just a little different pattern of it. It was more defined on the futures than it was on this. But in any case, um, we don't really have any bullish divergences yet on the 60-minute chart, but we do have them, on the ES here, or the futures. So we're at one of those things: is which one is it going to follow? Is it going to wait? Are we going to pop up and then come back down? Maybe do another test of this downtrend line. I'm just not even going to show it as a reverse symmetrical triangle. But maybe what happens is we pop up and come back down again. So what would make sense with this is we rally, say, up to the somewhere in this area here, the say the 4609, where the bulls give it a go, come back down, and we test this line again. And from there we see some bullish divergences in place, and then I would anticipate that we could get a rally. But you can see right here, this 4631 is major resistance. Now, what the problem right now with even looking on the long side, I mean, this is a bullish candle because we came down and closed closer to the highs and the lows. But here's the daily moving average, 50-day moving average, that's sitting right at 4600. So they got 32 points to go to get up and test this. And if they get up here, if it's used as resistance and we come back down again, as I put in the morning notes, to me it's going to look like it's lights out for the bulls. And most likely I really wouldn't even consider looking on the long side until we're testing the 200-day moving average, and we just have to prepare it there. So right now, like I said, really the important levels we have to watch. The first one is going to be the 50-day moving average at the 4600. If they get above that, then they're going to have to battle with this crossing 50 and 200 at the 4630. So the Bulls have their work cut out for them. And it's one of those things where it's hard to be bullish or bearish in this seasonality time period. But what's happening is the tape is making us more and more bearish. I'd still really I'd advise caution on both ways. I mean, I have a feeling this is going to be a magnet to 46.30. Now, if the bulls get above it, now we start going into price resistance 46.65, and then we have up here the 4700. That's resistance. So they've got themselves in some trouble right here, and right now like I said, I think they, at the bare minimum, they're going to test the 4600 level. If they get above that, then we're looking somewhere up at the 4631. The Bears, they're going to have to get it through these lows here. I mean, that's pretty much it. If they do that, then we're going to be testing the 4493 level, and those are really your parameters on it on where to look. So again, 4600, and then if the Bulls can get above that, then we're looking somewhere at the 4630, and then we have the 4665. So let's see what plays out tomorrow. Let's see the way the price action works, and then we'll start figuring out what's going on from there. So have a great night, and I'll talk to you guys in the morning.